Hello, bankers. A very good evening to all of you. Welcome back. Welcome to JAIIB CIB Prep. Guys, in this particular session, we are going to discuss our unit number 6, which is all about depreciation, right? Very important unit. So, you can expect 3 to 4 marks question based on this particular unit. All right. We will be discussing all these particular things in detail. Like basically, the name of the topic is depreciation and its accounting. Basically, this is the entire course curriculum, which is generally part of this one. Very important. Every time you'll see two numericals and one theoretical based question and all, right? So mostly the numericals are generally for 2 marks, like it can be 2 marks each, or it can be your one another question based on the theoretical aspect of this particular one. When it comes to the course content, it include the basic introduction of depreciation, causes, need, factors, accounting entries, method of depreciation, the most important part, so which includes straight line method, diminishing balance or written down value methods, and unit of production method, and the final one is sum of year digit. So these are the four methods which are generally part of your curriculum itself, right? Exam wise, this topic is very important. So we'll be exploring each and every subtopic of this particular unit. So let's start the discussion with your very first. I hope everybody know what is depreciation. So when it comes to the depreciation, it is basically decrease in the monetary value of an asset, right? So depreciation is as simple as that. Let's say we purchase an asset. Let's say we are running a tour and travel company. We purchase a car worth rupees 15 lakhs. Okay. After some time, or let's say after 1 year itself, after 1 year, the value of this car become suppose that 12 lakhs. So this decline in value, this reduction in value is generally known as depreciation. So we have to account this particular one. Basically, depreciation get adjusted with your it is treated as operating income, and we have to adjust this particular one in our profit and loss account, right? So now the meaning wise, this is reduction in the value of an asset, or decline in the monetary value of an asset, that is called depreciation. So you have to account this particular one. Like let's say the reduction in value is 3 lakh. So you have to change the book value of that particular asset like from 15 lakhs to 12 lakhs. That means like if you want to check the fair value of your assets, or if you want to know about the exact profit, let's say during this particular period you accounted a profit of 1 crore rupees. So 1 crore minus if it is depreciation adjusted, that means this is your pure income or pure profit. If it is not, that means your assets whose value is declined, so you have to adjust that particular one, then only you'll get to know the depreciation, the exact profit. Apart from that also, like let's say we also create provision for the depreciation. Let's say the useful life of this particular asset, or the economic life of this particular asset is 10 years. That means after 10 years, you have to replace that particular asset with a new asset. So for that one, you'll be requiring funds. So what we usually do, let's say the depreciation amount is 3 lakh rupees. So we create a provision of 3 lakh rupees. So we can have sufficient fund at the end of the useful life of that particular asset. So it is a very important aspect in our books also for any company, because majorly it is accounted on property, plants, equipments. Okay. So PP, accounting standard 10, and Indian accounting standard 116. So they have defined like why depreciation is important and which methods are important. Now most of the time you guys will face question based on your straight line methods, or a written down value method, or unit of production method. Why they generally ask question around these particular one? Because these are the permissible methods as per the Indian accounting standard. So companies, they have to account their depreciation by using these particular methods, right? And out of these like three methods, most of the time you'll see question around written down value methods, because most of the companies they generally use a written down value method or diminishing balance, which generally says assets in the beginning of their useful life they produce more, so the depreciation amount should be at higher rate compared to the later years. So this get used so many times, that's why it is part of your exam curriculum also, right? So a very interesting one, we will be discussing the depreciation factors and others. I hope you got an idea about this particular one. Then, like once we'll come to the areas of the methods, all the four methods which are given in your book. Apart from these three, we have sum of year digit method also. That is again very simple one, right? So let's just start the discussion with the basic summary portion. So when it comes to depreciation, is charge on profit and loss account for the fall in value of an asset during each years. This is the kind of a summary whatever I told you so far. So depreciation is part of operating cost or operating expense. It is in reduction. It is a reduction in value of asset, that 15 lakh to 13 lakhs. The decrease in value of an asset is due to uses of that car or that asset, or it can be caused by any wear and tear causes, or by other reason like time effects, or that is also known as efflux effect or obsolescence. Like let's say we purchase a laptop for our business purpose. We did not use that particular, even we did not open the seal of that particular laptop. We purchased it for 50,000. After 1 year, the value of this particular laptop become 40,000. Even you did not use that particular one. This is called your efflux effect or time effect, right? Because, or it can be obsolescence, that technology become out of you like kind of less popular compared to the previous 1 year and all, right? So this is something, the decrease in value of an asset is gradual and continuous. So now every year you have to adjust the depreciation amounts. Like every year there will be a reduction in the value of an asset, right? So depreciation, depreciable assets apart from land, others, all are others basically depreciable assets, right? So depreciation is simply saying it is a reduction in the monetary value or economic value of an asset, which is continuous or gradual till the useful life of that particular asset. Now, while you calculate the depreciation, so you will be requiring these three factors. Like let's say we purchase a machinery worth rupees 10 lakh. The useful life of this particular machine is supposed at 4 years, and the salvage value, which is also known as scrap value, so that is supposed at 2 years, 2 lakhs. Okay? So scrap value is something ki at the end of the useful life, when we sell that particular asset, so how much value you will get? So you will get 2 lakh in this particular case. So like let's say if you account depreciation by using straight line method, one of the simplest methods. So how we calculate depreciation? Depreciation is equal to your cost minus salvage value divided by useful life. So this is the formula. If you'll calculate depreciation by using, this is your straight line method. When you'll use a written down value method, so for this one, depreciation is equal to the book value or the book value of the year at the rate of a fixed depreciation rate. When you'll calculate depreciation by using unit of production, it is actual uses divided by estimated uses of that particular asset, uses in term of units or hours, into cost minus salvage value. So these are the three different methods which Indian companies they generally use while they account the depreciation. We will be discussing all these particular one, but whenever you will calculate depreciation, you will be requiring the cost of the asset. So when it comes to the cost, you have to apply accounting standard 10 or Indian accounting standard 116, property, plants, equipments, which says cost is equal to purchase cost plus installation cost, again installation cost plus any test run or any freight or any warehousing plus any non-refundable taxes. ठीक है? Any non-refundable taxes. So this get included in the capital cost itself. So that is the one. So this is your cost. The estimated residual or scrap value at the end of the life. So after uses or after the useful life, when you'll sell that waste, so how much money you are going to get? So that is like in our case, it is 2 lakh. That means actually you are paying 8 lakh for this particular one, correct? So the estimated number of years of its useful life, for how many years that asset will be part of your balance sheet in asset side. So that is the one, right? So these are the requirements. Before coming to the types of depreciation, let's discuss about the Indian Accounting Standard 16 or Accounting Standards 10, which generally deal with property, plants, equipments, right? So how companies will account depreciation on these property, plants, equipments, that is generally defined under this particular one. So deal with the accounting of property, plants, equipments, covering the asset recognition, valuation, and depreciation. So depreciable amount will be your cost minus residual value. So cost minus scrap value. Depreciation is the systematic allocation of depreciable amount over the asset useful life. Let's say if you are using straight line method, if the first year depreciation, the useful life is supposed at 4 years, in our case, so first year depreciation was 2 lakh, second year it is again 2 lakh, third year again 2 lakhs, and fourth year again 2 lakhs. So this is the one, 8 lakhs, and 2 lakh was salvage value, so it become 10 lakhs. So that is the logic behind this particular one, right? So useful life means time period of the asset, which for how long you are going to use that particular asset, and number, or it can be in some cases number of unit expected to be produced, like where we use unit of production. Let's say we purchase a printer or we purchase a machine which can give an output of 1 crore units, so which can give us an outcome of 1 crore units. So 1 crore unit is the like now how you are going to consume them in a year or 2 years or 3 years and 4 years. Once you'll consume 1 crore units, that asset will become aapka scrap, right? So that is the logic behind this particular one. Next one, property, plants, equipments, tangible assets, items used across accounting periods, held for the production or rental or administrative, not used for sale. Okay, let's say that car is not for sale, that laptop is not for sale. We are going to use that particular equipments as an asset in our business, so it can generate some revenue for the business itself, right? So depreciation rule, when it comes to the, so each significant part of item must be depreciated separately. Charges are recognized in profit and loss accounts and treated as operating expense. Depreciation must be systematic over the useful life. The method should reflect how economic benefit are expected to be consumed in each and every single years, right? So this is something which is given in your book itself. So let's have a look. So depreciation, each part of the item PP with cost of the significant relation to be a total cost of the item should be depreciated separately. The depreciation amount allocated systematic basis. Depreciation charge for each period should be recognized in the statement of profit and loss account. Residual value or useful life to be reviewed at each balance date. Any changes in accounted for the change in the accounting estimate as per the accounting statement 5. Depreciation method should reflect the pattern in which the asset future economic benefit are expected to be consumed. Depreciation method to be reviewed at least at each financial year. Any change in the accounted for the change in accounting estimate, so you have to deal with the prior period item accounting standard 5. Depreciation method includes straight line method, written down value method, and unit of production method. So this is as per the requirements of the accounting standards and Indian accounting standards. That means if as an Indian company, if you are preparing your accounts or your reports, so while you account the depreciation, you are allowed to use only these three methods, or you can opt any out of these three methods, right? When you'll come to the depreciation accounting, we have so many methods, but you have to use any of these three methods, right? That is the one. In your curriculum, we have another method, that is sum of year digit. We'll talk about that one also, right? So methods of depreciation, that means straight line, diminishing balance and unit of productions are allowed as per accounting standard 10 and your Indian accounting standard 16. Method should be applied constantly to the convention of consistency that must be followed. That means if you are using like written down value method to account the depreciation, so it should be followed throughout the useful life of that particular asset, right? That is the logic. Disclosure requirements, depreciation method, like while you disclose the things, so you have to disclose ki, like let's say you have accounted 1 crore rupees depreciation on your all assets, so by which method you have accounted that particular one, you have to show it in your note to accounts. Depreciation rate or useful life of the asset, that also have to disclose in that particular one, right? So this is something about the fundamental part of your depreciation, very simple one. So what is depreciation, or the uses of accounting standards and all, that we have discussed. Now the most important part which we are going to discuss, that is types of depreciation methods. So first we will be discussing the three methods. uh, Here we'll be discussing all the four methods one by one with examples also. Again, out of these four methods, written down value method and unit of production in straight line, they are very important. Why they are important? Because as per the accounting standards, these are the permissible methods to the Indian companies. Okay? But sum of year is also given in your curriculum, so we have to cover that particular one also. So let's start the discussion with very first method, which is straight line method. So guys, when it comes to the straight line method, it is one of the simplest method to account depreciation. As per this particular method, depreciation amount charged will remain constant throughout the useful life of that particular asset. Let's say we purchase an asset worth rupees 12 lakh. The salvage value is supposed that 2 lakh, and the useful life of this particular asset is 5 years. Okay? So this is the data which is given in your question itself, let's say. So now when you use depreciation by using straight line method, so depreciation is equal to your cost minus salvage value divided by useful life. That means what will be cost minus salvage value, 10 lakh divided by 5, so it is 2 lakhs. So depreciation, the company is going to charge depreciation on this particular asset. First year depreciation will be 2 lakh, second year depreciation 2 lakh, third year, fourth year and fifth year depreciation will be 2 lakh. So every year they'll charge depreciation by a same or with a same amount. So that is your straight line method. Simple one. I hope you understood this. So straight line depreciation is very common and simplest method to account depreciation expense. In straight line depreciation, expenses amount is the same every year, 2 year, 2 lakh, 2 lakh, 2 lakh, over the useful life of the asset. So every year we are charging or accounting depreciation with 2 lakh rupees till the useful life of that particular asset. You just have to remember this formula and you will be able to solve this one, right? So very simple one. Understood? Cost minus estimated residual value divided by useful economic life. So that is something, the formula for this particular one. Now we will be solving some questions. With these particular questions, we will be building our understanding. So an asset purchased for 50,000 has a salvage value of 5,000. Useful life is 10 years. So what will be the annual depreciation under the straight line method? So what will be your correct answer? So depreciation is equal to cost minus salvage value divided by useful life. So which is equal to, cost is 50,000 minus 5,000 salvage value divided by 10. So this is the one. So that means 4,500 will be your correct answer for this one. So the depreciation will be charged with the amount of 4,500. So every year this company is going to account depreciation at the rate of 4,500 in their books. Okay, they'll, like, let's say first year the book value of that particular one is suppose that 5,000. So next year it will reflect आपका 10 minus this. Okay, every year they'll decline that particular balance by the depreciation amount. Right. Next one, an asset cost 80,000, salvage value is 10,000, useful life is 5 years. So what will be your correct answer? Your cost is 80,000 minus 10,000 divided by 5. So that means 70 divided by 5. So 70,000 divided by 5. So what will be your correct answer? Okay. The question was something else. Okay, sorry. So, what will be the total depreciation over the asset's useful life by using straight line method? What will be the total depreciation during this? So, 70,000. So, why it is 70,000? Because cost minus salvage value. Salvage value will get at the end of the life, and thus remaining amounts will get depreciated throughout the period. So, if they ask you to calculate the depreciation, so depreciation per year, so the outcome will be the depreciation per year. Okay? So this is depreciation for a year into 5, that will come to the 70,000 itself. Hope it is clear. Next one. If an asset costs 60,000, the salvage value is 5,000, estimated useful life is 10 years, and the asset sold after 5 years for 25,000. What will be the gain or losses on this particular sale? So now see, the asset, the depreciation is equal to, depreciation is how much? 60,000, 65,000, 65,000 cost minus salvage value. It is also known as depreciation base. Depreciation base, take a 65,000, 65,000 divide by 10, which is per year depreciation is 6,500, right? So depreciation, first year depreciation will be 65,000. Second year depreciation is 65,000. Third, sorry, it is 55,000. 55,000 minus 10,000. So it is your 55,000. So divided by 10 is 5,500. So 5,500 for the 4 years. So if you multiply this particular one, how much it will come? So 5,500 into 4. So the depreciation which is charged for the fourth till the fourth year is how much? 22,000. Okay, this is 22,000, and the asset value was like 55,000 minus 22,000 is equal to 33,000. So it was 33,000, and they sold after 5 years. Sorry, we have to calculate for 5 years. 55 into 5. So 5-year depreciation was 27,000. 5 years depreciation is 27,500. First, then if you minus this particular one with the 60,000, so 32,000, and you'll get 32,500, 32,500, and they sold it for 2,500 minus 25,000. 7,500. There is some calculation error, but it is a loss of 7,000. It is a loss of 7,000. A loss of 7,500. Yeah, they occur a loss of 7,500. If it is explained, yes. See? So there is a loss of 7,500. How we calculated this particular one? See, the depreciation for 1 year, we are using straight line method. So per year depreciation is 5,500. How we achieve this one? Cost minus salvage value. Now the depreciation over 5 years, if you multiply that particular one, so we reach to 27,500 itself, right? Now the asset book value at the beginning was 60,000 minus 27,500. So asset value as of now, or at the end of 5 year, at the end of 5th year, the value of this particular asset is how much? 20,500, and you are selling that particular asset for 25,000. So 32,500 minus 25,000, so it reached to 7,500 in negative. So we made a loss after selling this particular asset of worth rupees 7,500. Understood? Very simple calculation mathematics, and you all know about this one. One another question, guys. January 1st, 2020, ABC purchase of machinery worth rupees 1 lakh, spent 4,000 on carriage and 8,000 on its installation. This was a PYQ. It is a PYQ question. It get asked in 2023 or somewhere. Okay. So it is useful life is 10 years, scrap value is 12,000. So what is the depreciation value every year by using straight line method? Very simple. So your cost. So cost is equal to purchase cost 1 lakh plus installation, 4,000 on carriage, 4,000 plus 8,000 on installation. So the total cost of this particular one is 1.12 lakh. This is the cost. So when you account the cost, you have to use the property, plants, equipments, that accounting standard 10 or Indian accounting standard 16. Salvage value is after 12,000. So that means depreciation base or value is your 1 lakh. So now 1 lakh divided by 10. So that is 10,000 will be correct answer for this particular question. Understood? So 10,000 will be right answer for this particular one. So the very first method, which is called your straight line method. One of the simplest method. Basically this method, which if you apply this particular method, the rate of depreciation, the amount of depreciation which we have to account, that is the same throughout the useful life of that particular period. In this case, the depreciation for first year will be 10,000, and even for 10th year it will be 10,000 only, right? So this is the very first method. Now let's move to the second method, which is your straight line method, or sorry, written down value method, or your diminishing balance method. So when it comes to written after this method, please listen me carefully for next 5 minutes. So because if you'll able to make understand, so it will be very easy. Okay. So straight line method versus your written down value method or diminishing balance. Let's say there is an asset, we purchase an asset worth rupees 12 lakh. Same question. Let's say salvage value is your suppose that 2 lakh, and depreciation rate, in case it can be given depreciation rate also. So because for written down value method, we generally have a depreciation rate that we charge depreciation at a fixed rate. So it is your let's say 10%. Okay. So if you'll calculate depreciation by using straight line method, if you use calculate depreciation by using straight line method, so what will be depreciation for first year? It will be 10,000. Okay, 10,000. How we reach to 10,000? Cost minus salvage value, so that is 2 lakh, 10 lakhs. So cost minus salvage value, which is 10 lakh. 10 lakh ka 10% is equal to आपका 1 lakh. ठीक है, not 10,000, it is 1 lakh. Sorry. So it is 1 lakh. So first year depreciation will be 1 lakh in this particular case. Now, if first year depreciation is 1 lakh, your 10th year depreciation will be also 1 lakh. This is the something which we have already understood with our previous question. So every year depreciation amount charged with the same value. Now, in case of written down value method, the game will change slightly. How it will change? Written down value method says an asset which when it is new, it produce more, it give more output. So the depreciation amount should be at higher rate. So basically, written down value method, when it comes to the diminishing balance or written down value methods, so how you will account the depreciation? First year depreciation will be same, because the book value is how much? No, not same. The book value is 1 point. It is salvage value this 14, sorry, 12 lakhs. So the book value is 12 lakh. 12 lakh ka. Now in case of written down value method, it is book value of the asset at the rate of a depreciation rate. So that means you do not have to account the salvage value. You do not have to consider this salvage value in this particular case. So 12 lakh at the rate of the depreciation rate is 10%, so it is equal to 1.2 lakh. So initially, what will be the depreciation at the first year? 1.2 lakh. Here it was 1 lakh. Now, second up, every year you have to calculate the declining balance or the diminishing balance of that particular asset. How you will calculate that diminishing balance? Again, diminishing balance is equal to, or the decline value of that particular asset is your previous year book value, or at the beginning of the book value minus depreciation for the year. So that means 12 lakh. So how you'll reach this particular one? At the end of first year, the asset value will be 12 lakh minus 1.2 lakh. So which is equal to your 10.80 lakh. So this is the book value at the end of first year. So while you calculate depreciation for second year, how you'll calculate the book value at the beginnings, which is 10.80 lakh, at the rate of 10%. So which is equal to, so the depreciation for second year will be your 10% means 1.80, sorry, 1.08, 1.08 lakh. So the depreciation for the second year will be 1.08, right? Am I clear? Correct? It is 1.2 lakh, and it is, please go through this calculation if I'm doing any wrong here. So how you will go for the third year? Just I'll calculate this one. 1 lakh 8,000, which is correct here. So 1 lakh 8,000. Now, minus 1 lakh 8,000 is the depreciation. If we reduce this one, so the asset value or the book value at second year will be 9 lakh 72,000, right? 9 lakh 72,000. This is the book value at the end of second year. When you'll calculate the depreciation for third year, so into, so it will be depreciation. So आपका इसका 10%, which is equal to 97,200. So depreciation for second year will be 92,000, sorry, 97,200. So every year. Now this is the game which you have to make your, you have to build your understanding around, right? So here in this particular case, depreciation amount charged will remain same throughout the period. But when it comes to written down value method, initially that machine or asset give the higher output, so depreciation amount charge will be higher, 1.2 lakh. Then after it will gradually come down, 1.08 lakhs and 97,200 97,200. If you'll calculate depreciation for fourth year, obviously it will come down that one, right? So two things which you have to remember: this, your depreciation rate will same throughout the period, but you have to calculate the book value at the end of every year. So sometime how examiner will ask question ki what will be the book value at the end of second year and what will be the depreciation for third year. So in a same question they are asking two, they are giving you two options. So depreciation for third year will be आपका 97,200, and book value at the end of second year will be 9,72,000. So this is something, or even they can ask for 1 year or the fourth year also. So that is something which you have to remember. Understood, guys? Yes or no? Now let's go through the fundamental aspect of this particular topic, right? So this is the depreciation method in which percentage rate that apply to the residual balance. Residual balance means how you will calculate this residual balance. It is the book value at the beginning minus depreciation of the year, right? So this is the one, rather than the original cost, as we are doing in case of your straight line method. In straight line methods, we have to minus the salvage value. Here you do not have to consider the salvage value also. The written down value method, account diminishing balance method, Diminishing balance means every year the asset value decline, and you have to adjust that decline in your books. That is known as your residual balance, right? At a constant depreciation rate per years. So this method is more relevant where the particular asset is expected to give better performance in the initial period of compared to later one. Sorry. Thus, changes in profit and loss account is higher. Charges in profit and loss account is higher in initial years as compared to later years. So, how you calculate depreciation? Previous year value divided by into your rate of percentage. Okay, now please quickly go through this particular question, Tim. Go through this particular question and try to answer. Right, very simple question. So you have to practice these particular one because it is a downside 3 marks. You guys are going to get these one. So if an asset with any original cost of 1 lakh and depreciation rate is 10%, depreciated using written down value method, what will be the depreciation expense in the second year? So what will be the depreciation amount for the second year? Very simple. So first year depreciation is, depreciation is first year is your asset value 1 lakh at the rate of 10%, which is how much? 10,000. So depreciation for first year will be 10,000. Now asset value at the end of first year is how much? If 1 lakh minus 10,000, which is equal to 90,000. So this is the residual value of the asset at the end of first year. Now when you will calculate depreciation for second year, it is 90,000 into 10%, right? So that is equal to 9,000, right? So the depreciation charge for the second year will be 9,000. So this is the case. If they'll ask for the third year, so 90,000 third year, how you'll calculate? So asset value at the end of second year is 81,000, taken. And the depreciation for third year is आपका 81,000 into 10%, which is 8,100. So 8,100 will be the depreciation amount for the third year itself. So on. So you can calculate according to this. Understood? Next one. If an asset purchased for 50,000 and depreciation is 10%, depreciation rate under the written this. So you, what will be the at the end of first year? It's a very simple question, right? So 5,000. Sorry, what will be the value of an asset at the end of first year? So it is 5,000 will be the depreciation. Depreciation for first year will be आपका how much? It is 5,000. How we reach to 5,000? 10% of 50,000. And the asset value is आपका 50,000 minus 5,000, which is equal to 45,000. So 45,000, that means option A will be your right answer for this one. Getting my point? Next one. An asset cost 80,000, salvage value 8,000, depreciated at 15%, written down value method. What is the depreciation in the third year? Assuming the depreciation rate is applicable to written down value method. So how you will calculate? So like, see, this is a written down value method. So you do not have to consider the salvage value, right? So this will not get considered. So first year depreciation will be 80,000 and uska how much percent is 15%. This is the depreciation for first year. Let's say it is X. Now this 80,000 minus X, this is the depreciation base for your second first year at the end of first year. Second year is, let's say, Y into 15%. So this is suppose that Z. Okay, this is the depreciation for second year. Okay. Now if you'll minus Y minus Z, so let's say you reach to A. This is the asset value at the end of second year. Third year आपका, how you will calculate third year? So it is A at the rate of 15%, and that will be your answer for this particular question, because they have asked what is the depreciation in the third year. They did not have asked you the book value or others. So that is your answer for this one, right? These answers can be wrong also, but it's just you have to follow this particular structure. This you have to do it, okay? This is kind of your homework question. So please try this particular one, right? So just build your concept, right? As asset 20,000 for every year rate of depreciation 20%, 3 years. Again, similar आपका, ठीक है? You will be able to calculate this one, yes or no? Very simple calculation also. So first year depreciation will be 4,000. Book value at the end of first year will be 16,000, right? Then second year depreciation will be 16,000 at the rate of how much? 20%. So it is equal to 3,200. So my book value minus 3.2 thousand. So it is equal to 12,800. So 12,800 into 20%. So which will come around कितना आएगा? Just a minute, I'll calculate this. So 12,800 into 20% 0.2. So it is 2560. So 2560 means option D will be your right answer for this one. 2560. Okay. So option D will be correct answer for this one. So this is the one. So this is your second method. Now we will be entering to a third method. Third method is unit of production. So when it comes to unit of production, so far your basically these two method is generally based on passes on time. Okay. Now unit of production is something which is about the depreciation is generally get accounted on the basis of uses. Uses means, let's say we purchase a machine, we purchase a machine for rupees 10 crore. Well, let's say we spend 10 crore rupees on this particular machine. So this is your purchase cost. So cost is आपका 10 crore. And the machine, the salvage value is suppose that 1 crore at the end of the asset. And the third one is, let's say let's say like that simple meanings, the output, the expected output from this machine is suppose that 100 crores. So so we have invested, actually we have invested 9 crores. Cost minus salvage value, cost minus salvage value, that is 9 crore. In this 9 crore you will get how many units? आपका 100 crores unit. So this is use base. This is called use base method. So you have spent on a machine worth rupees 9 crore. How we reach to 9 crore? Because this 1 crore you will get at the end of the useful life, or the after using these 100 crores unit, right? When you sell that particular one as a scrap, so you'll get the 1 crore rupees back. So the actual spend is your 9 crore. So you have spent 9 crore rupees on an asset which will give you an output or estimated output of 100 crores. Now out of this 100 crore rupees, let's say first year we consume or we produce let's say 15 crores of units. So first year production was 15 crore unit. Now how you will calculate depreciation by using this? So unit of production, so depreciation, while you calculate depreciation by using unit of production, it is actual production, actual production divide by estimated production into cost minus salvage value. And here is your answer also. So cost is, sorry, actual production is how much? 15 crores. Divide by the lifetime or the expected production is 100 crores into cost minus salvage value. Cost minus salvage value is how much? 9 crores. So if you solve this particular equation, what will be your correct answer? So 15 divided by 100 into into 9. So it is 1.35 crores. So your depreciation for first year will be 1.35 crores. Okay? So this is the first situation. Let's say another situation, second year or any other year, we produce, suppose that 30 crores. Second year production was 30 crores unit. So the depreciation will be higher because it is use based method. If you are producing less, if you are consuming less, you will charge less depreciation. If you are consuming higher, your depreciation will be at higher rate. Let's say, so how you will calculate this one? 30 crores divided by 100 crores into 9 crores, right? So 9 crore is means cost minus salvage value. So 30 divided by 100 into 9. So it is 2.7 crore. So depreciation for the second year will be 2.7 crores. So this is the basic calculation. बहुत ही आसान है, ठीक है? I hope you're getting this particular one clearly, right? So unit of production method which generally account depreciation based on uses. You have spent 9 crore rupees on that particular asset, and in that 9 crores you will get estimated 100 crore rupee 100 crores unit, right? So this is output is in unit or hours taken 100 crore units. So now out of 100 crore units, first year you consume 15 crores, take 15 crores unit. So for that one, your depreciation will charge accordingly, which is 1.35 crores. Second year, you consume 30 crore units. So depreciation will be higher than the previous year because your consumption was higher. So that's why the depreciation is 2.7 crore. Third year, suppose that you consume only 7 crore units. So 7 divide by 100 into cost minus salvage value. That is your answer for that particular question. Understood, guys? So let's go through this definition. This method is use-based method. Uses-based method. Again, the depreciation amount is not based on passes of time, but actual use of asset. In this method, useful life measure in term of production output or number of unit which an asset is capable of producing during its useful life or lifetime. Like our asset was capable to produce 100 crores unit, right? So that is the one. So how we calculate this one? Depreciation expense is equal to number of unit produced. This is actual number of units produced during that particular period, divide by lifetime number of units or estimated number of units that machine can produce into cost minus salvage value. So this way you are going to calculate the depreciation by using unit of production method. Now first question on your screen. If an asset under the unit of production method produce 15,000 units in the first year, 20,000 units in the second year, and 10,000 units in the third year, what is the total depreciation for the first year if the depreciation per unit is 0.55? So this game is very simple. So depreciation per unit is आपका 0.55 into the first year output is 15,000, right? 15,000. So it is 8,250. You just have to multiply this particular one, right? So this is a very simple calculation. 8,250. Next one. If an asset cost 50,000, salvage value is 5,000, expected production is 1 lakh units, what will be the depreciation third year? 12,000 units were produced in this particular year. So you do not have to worry about the first year, second year, third year. You just have to worry about the actual number of unit produced during that particular period, right? So what will be your depreciation? So your depreciation is equal to 12,000 divided by the actual production or the actual production divided by estimated production, which is 1 lakh into cost minus salvage value. Cost is 50,000 minus salvage value is 5,000. So the outcome is 12,000 sorry 12,000 divided by 1 lakh into 45,000. So it is 5,400. It should become 5,400. Am I doing any mistake here? 12,000, 1 lakh 50. It should become around 5,400. I guess these options are wrong. Again, I'll check this one. So 12,000 divided by 1 lakh in is equal to 0.12 into your 45,000. So it will come for 5,400, right? So it will come 5,400. So 5,400 will be right answer for this one. If an asset purchase 80,000 purchase for 80,000 and production is 1,60,000 unit over life. The residual value is 8,000. What is the depreciation expense for the first year where we have produced 20,000 units? So 20,000 divided by the actual production asset was purchased for 80,000. Expected production is 1.60 lakh into cost is 80,000, salvage value is 8,000. Okay? 80,000 and salvage value is 8,000, 72,000. So the outcome will be your answer. It is 20,000 divided by 1,60,000. So it is equal to 0.125 into 72,000. So it is 9,000. It will be your answer. So option A will be your 9,000. Okay? So with some question, what we have actually the problem with these answer is we have changed these numbers, but we did not change the option. So that's why the challenge is coming. Otherwise, like you have to understand your logic. You have to build your logic. That's it, right? An asset cost 1 lakh, residual value is 10,000, expected production is 50,000. First year they produce, or during that particular period they produce 5,000 units. So depreciation will be 5,000 divided by your mm, uh, cost is this. Expected production is 50,000 into cost minus 1,90,000. So outcome will be your answer for this particular question. Understood, guys? A company ABC purchased printer machine that can manufacture 20 lakhs prints. After it have to be scrap. The purchase cost is 1 lakh 10,000. Scrap value is 10,000. During first year production, machine produced 2 lakh. So 2 lakh divided by 20 lakhs 0.10 into the cost of this purchase cost is 1 lakh 10,000. This, so it cost minus salvage value is 1 lakh. So what will be your correct answer? 10,000. Okay? So 10,000 will be your right answer for this particular one. So this is all about your unit of production. Now the next method is basically based on sum of year digit method. Very simple one, kind of a Sudoku. You are going to solve the Sudoku by applying this particular one, right? First three methods are the most important. Why they are important? That I have already explained you. So sum of year digit method of depreciation here in this particular case, when it comes to the sum of year digit method, so you have to sum of year digit methods of depreciation is equal to remaining life divided by sum of year digit into cost minus salvage value. This is the formula. So basically in this particular, in these kind of cases, how you'll calculate depreciation, you have to calculate the depreciation rate first, right? So first you have to understand how we calculate sum of year digit. Let's say there is an asset whose value is 10 lakh, right? Salvage value is 2 lakh and useful life is supposed at 5 years. Now, how you will calculate depreciation or account depreciation by using sum of year digit method. So, सबसे पहले first you have to calculate the remaining the sum of year digit. Sum of year digit is equal to this is depreciation actually. Okay, this is depreciation is equal to this. Sum of year digit is the sum of these 5 years, means 5 year plus 4 year plus 3 plus 2 plus 1, which is equal to 15. So the sum of year digit is how much? 15 years. Okay, this is the one. Now, why I mention around this, I can also write like 1 plus 2 plus 3 plus 4 plus 5. This, and again it will be 15 years, right? But this is a wrong approach. If you write this now, you'll do some sort of mistake while you calculate depreciation for second year, third year and all. Well, how come? So what will be the depreciation rate for first year? So first year depreciation is remaining life, that is 5. So 5 divided by sum of year digit, that is 15, into cost. Cost is 10 lakh minus salvage value is 2 lakh. So depreciation for first year is like this. Okay? So what will be your answer for this one? Sorry. So 0.333 into 8 lakhs, right? So 28 lakhs now. Yes. So 20 the for the first year it will be आपका 2.66 lakhs, 2.66 lakhs. ठीक है. First year depreciation will be 2.66 lakhs, 0.33 into 8 lakhs. हाँ बिल्कुल करेक्ट. सो फर्स्ट ईयर आपका 26,000 around आपका 666 whatever the number is. Second year, how you'll calculate depreciation for second year? Remaining life, now this second year remaining life 4 divided by sum of year digit 15 into 8 lakhs. ठीक है, cost minus salvage value. So the second year depreciation will be 4 divided by 15, so which is 0.2666 into 8 lakhs. So it is 2 first one was 2.13 lakhs. ठीक है, so 2.13 lakhs will be depreciation for second year. So this is the way, right? So the only thing now this part why I mentioned or why I have written like this. So see, sometime what happened now during the examination, if you'll write something like this, so when you'll calculate the first year, this is your second year, third year, fourth year, and fifth year. When you'll write like this, so it will when you will pick the remaining life at the first year for the remaining life, first year 5 years, so that you'll pick like this. Otherwise, sometime what will happen in hurry burry, if you'll mention like for the first year, if you'll do 1 divided by 15, your all answer will went wrong, right? So you can write like this also, but you have to consider first this one, because this is the remaining life during that first year. This is the remaining life second year. Okay, third year, fourth year, fifth year, this is the one. Okay, that's why we write in this direction. So we do not do any sort of mistake while we solve these kind of question also. So the sum of year digit method is one of the accelerated depreciation method. A higher expense is incurred in the early years, as it was in our case also, and a lower expense is in the later year of the asset useful life. So depreciation expenses remaining life. All right, I hope you remember that formula which I have mentioned. So remaining life divided by sum of year digit into cost minus salvage value. How you calculate sum of year digit method? Let's say for 8 years. For 8 years, how you'll calculate this one? So it is 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1, which is equal to how much? 36. Okay, so it will be your 36 years. So this kind of things practice which we have to do. In sum of year digit depreciation method, the remaining life of an asset is divided by this. It is formula only, right? Chalo, let's solve this one. Calculate the amount of depreciation for first year using sum of year digit method. So you have to calculate first year. So the equipment cost is 1 lakh. Depreciation is 20,000, sorry, salvage value or residual value is 20,000, and useful life is 5 years. So luckily we have 5 years also. That means what, like remaining life divided by sum of year digit into cost minus salvage value. So what will be your depreciation for first year? Depreciation rate is 5 divided by 15. How will I reach to this 15? 5 plus 4 plus 3 plus 2 plus 1, 15. Sum of year digit. So sum of year digit is 15. So that means your 5 divided by 15 means 0.33333 into 80,000. So if you do the calculation, you reach to your answer, right? So 0.3333 into 80,000. So 80,000. So it is 6,664. So 27. That means option second will be right answer for this particular one. Correct? Hai? Understood? So this is the one, right? So this is all about your depreciation methods which are part of your curriculum, right? And again, I'm saying the most important methods are written down value methods and unit of production, then your straight line method, and then your sum of year asset method, right? Especially those three methods are very important because they, as per the accounting standards, they are allowed to the Indian companies. And most of the time, for the taxation purpose and all, companies they generally use written down value method. So that's why maximum time you'll see question based on that particular one. So how we do accounting for the depreciation? So we have two sort of accounting. One is the accounting entries to be made on accounting for provisions. So let's say if we are creating some provisions, so it is depreciation account to asset account. Please do remember this one. The depreciation account goes to the debit of profit and loss account, and the asset appear in the reduced value in the balance sheet, right? So it will go to the profit and loss, and you have to reduce the value of that asset to the balance sheet. So depreciation account to provision for depreciation accounts. So this is the case. Okay, very simple one. There is no worry about this particular one, right? So let's summarize this. All intangible asset except land have limited useful life. So you do not have to depreciate land, huh? Do not do these kind of mistakes. So depreciation means allocation of cost of an asset to the period that benefit from the service rendered by that asset. Depreciation accounting is described by AICPA, that is a meaning and all. Okay. So these are the basic factors. It's very simple one. Now let's practice some question also. Uh, just a minute, huh? I have one another session. Yes, all fine. We can do it. So if you get some theoretical questions, which of the following statement regarding depreciation are true? Depreciation is only caused by physical wear and tear causes? No, not only. We have obsolescence, we have efflux effect and all. Depreciation is recognized as an expense on profit and loss account over the asset's useful life, regardless whether the asset are is used and not. Statement 2 is correct. Again, obsolescence is a cause of depreciation that occur due to technological advancement or change in market demands, which make the asset outdated. True. Depreciation result in the reduction in the book value of an asset, but it does not affect the market price of the it does not affect the market price of the asset taken. So this is also correct. The passes of time alone can lead to depreciation even if the asset is not physically used and used, as seen the case of non-functional asset. Yes, 2 3 4 5 2 3, that means there is some depreciation is result in reduction in the book value of the asset, but it does not affect the market price of it will affect, okay? Like value sold, this, that means C should be right answer for this one, right? C, statement 4, depreciation reduce the book value of the asset, but it can affect the market price as well, especially the asset become outdated or obsolescence. What is the accounting entry of for providing depreciations to? So depreciation account to asset, provision for depreciation to asset, depreciation. So option B will be right answer for this one. Again, B, A, Y, A. It was accounting entry for providing depreciation. Okay, it was what we have done. Depreciation account to provision for alternative and depreciation account to provision for depreciation. As okay, okay, it is something related to provision and it is only about the depreciation. Sorry. Uh, that means option A only will be right answer. Depreciation account to asset accounts, that is the right one. In case of provisioning, we have this one, right? Depreciation to asset, and for provisioning we go for this particular one. Next one, a company purchase a machine on 1st April 2025 for 5 lakh rupees. The estimated useful life of machine is 5 years. Estimated scrap value is 50,000. The company follow the straight line method. So calculate the depreciation for first year and the book value of the machine at the end of first year. So straight line method, 5 lakh minus a scrap value is 50,000. 4 lakh 50,000. 4 lakh 50,000 divided by 5 is 45,000. Sorry, how much? 4 lakh 50,000 4,50,000 divide by, okay, 90,000 or something now. Let's calculate this. Divide by 90,000. Okay, so depreciation will be 90,000 and book value will be, आपका book value is 5 lakh minus 90,000, so it is 4,10,000, right? So option B will be right answer for this particular one, correct? So 90,000 and it is आपका 5 lakh minus 90,000, that is the book value. Which of the following statement are true regarding written down value method? Depreciation under written down value method is calculated on original cost of the asset every year. It is residual balance actually. Okay. So statement 1 is wrong. The written down value method assume a constant depreciation rate. Second one is true. Written down value method is more relevant of asset perform better in their initial years. True. If the in the later years the depreciation would written down value method is higher, no, it will be lower. So this is also wrong. The total depreciation and repair expenditures tend to balance out under the asset useful life. Under the total depreciation and repair expenditure tend to be balanced out in this one, right? This is also correct. So what 2, 3, 5, 2, 3, 4, 2. D should be right answer for this particular one. Correct? Next one. Consider the following statement regarding unit of production. It is a suitable for asset whose depreciation depend on uses rather than the time. 100% true. It provide less accurate measure. It provide more accurate measure according to uses. It require detailed tracking of production or uses data to calculate the depreciation too. 1 and 3. 1 and 3 means option C will be right answer for this particular one. Next one. A machine purchased for 10,000, expected salvage value is 1,000, useful life is 4 years. Using sum of year digit method, calculate depreciation expense for second year. So you have to calculate depreciation year for second year. Okay? Now you have to use sum of year digit. So useful life is how many years? 5 years. So sum of year digit will be 4 plus 3 plus 2 plus 1, which is equal to 10. Okay? 7, 10. So which is 10 years. Okay? Then you have to calculate depreciation for second year. So that means 3 divided by 10. This is your first year and this is your second year, right? 3 divided by 10 into cost is 10,000, salvage value is 1,000, so 9,000. So outcome will be your answer for this one, right? So 3 divided by 10 into 9,000. So 2,700. So option B will be right answer for this particular question. Correct? Hai? Next one, guys. Which of the following is correct formula to calculate the depreciation under straight line method? Sometimes we have experienced these type of question also. So you have to be ready. So cost minus salvage value divided by useful life. Without any doubt, this will be the right answer. And asset purchase for this straight line method. 50,000, 5,000, 4,500. I guess this question we have discussed earlier also, right? These are some questions which we have discussed. Under the written down value method, the depreciation is calculated the original cost, the reduced value of an asset, right? So B will be correct answer. Next one. Unit of production method, depreciation is calculated estimated useful life of asset, the total number of unit production expected from the asset itself and the uses, right? Next one. Company X manufacturing are producing electronic devices. They recently acquire a machinery for 2 lakhs enhanced production. The machine has estimated useful life of 5 years. Total production estimated is 1 lakh. First year they produce 15,000 units. So you have to calculate the salvage value is 20,000. So what will be your answer? Unit of production, take a unit of production. So actual use is 15,000, lifetime capacity 1 lakh into cost minus salvage value 2 lakh minus 20,000. So it is 1.80 lakh. So what will be your correct answer for this one? 15 Divide by 1 lakh 27,000. So 27,000 means option second will be correct answer for this particular question, right? Next one. Which of the given reason for the need of depreciation to make provision, to know the correct profit, to show the correct financial, to estimate the residual scrap value? So all will be correct answer. 1, 2, 3, 4 also. Okay? So 1, 2, 3, 4 all are the correct one. Next one. This is it. So this is all about your depreciation and its accounting. I hope you enjoy the session. I hope you get all these particular point clear. So it's a game of 3 to 4 marks. So you have to be very careful. Your concentration should be around like the methods. That most important part is methods of depreciation. 4 methods. You have to build your command on all 4 methods given in your books. Uses, sometimes they also ask some sort of theoretical aspect of this particular one, but very rare chances, and that rare things happen in my shift in 2023. But you have to be prepared for this one. You have to build your concepts, or you have to basically work on your fundamentals. If you are good with that one, you can easily solve all questions. All right, guys. So this is it from my side. Thank you for joining this session. I'll see you tomorrow at same time, and we will be talking around our unit number 7, which is all about capital and revenue expenditure. Very small unit, right? So this is it. Bye bye. Take care all, and all the very best for your preparation. And if you guys are having any queries or any doubts, or if you are facing any challenges while you're going through these particular classes and all, please do let me know. You can ping me on app, or you can ping me on WhatsApp or Telegram. I'll try my best to help you out, right? So this is it. Bye bye. Take care all, and have a nice day. Thank you.